It's another edition of the Honeymoon Traders, and I'm here with my son Andre and my wife Amanda.
Hello.
Hello.
And today, this is the highlight show for today, 4/3/2020 on a Friday. And we are not professional traders. We don't recommend trades to anybody. This is for amusement purposes only, and trade at your own risk. Okay, getting started. I just wanted to show you the chart of the 6 month 4 hour chart where we were just at 225 a month ago, and where we are today. I know this is all cluttered up, but we'll zoom into it. But we're looking at the longer trend line that has followed us all the way through here and hasn't been broken yet, and the secondary trend line has been broken. So that's why we had an upswing here. And we will go to the 10-day, 30-minute chart.
Mm-hmm.
And this I just wanted to put up to show you that from the low, from the bottom of the crash so far at the 2017 level to the high that we had last week of the what was it, 263.56 level, I drew a Fibonacci line. My daughter and my son think this Fibonacci thing is a joke, and I don't really have any.
Okay, for those who don't know what the Fibonacci lines are,
Okay.
All right, these are just very specific, unchanged intervals where these lines are drawn. And these lines correlate to measurements in the Fibonacci, spiral equation or something, but they never change. So in some measure of degrees, there is this Fibonacci equation going on, and these lines are at the same points that those degrees of change occur.
Okay, hon. So anyway, the Fibonacci, we're not here to teach you Fibonacci's. There's a billion YouTube videos on Fibonacci's. Okay?
And it may be they don't mean anything, actually. They're just something to base things on in case you need some stability.
Okay, moving on. I'm just showing you, I put Fibonacci lines to see if they have any correlation to our to the trends or to the resistance or support. Anyway, so I drew a Fibonacci from the bottom here.
The solid lines are the Fibonacci's.
Right, this is these solid lines here, and I drew it from the bottom of 217 to the high of 263. Those are those are the extremes of this chart. This is the complete bottom, and this is the complete top of this time frame. And we got the 23.6, we've got the 38.2, we've got the 50% and the 61.8% and the 100% up here. Okay? That's how I drew these Fibonacci's. Okay, now I don't know whether they work or not. I'm not here to discuss that, but I threw them up there to see where they land on our chart.
There's a Fibonacci function that you pick and you lay it on there, right? You don't have to each map out the 23 and the 38 and the 50 and the 100. If you pick the Fibonacci function, these lines map themselves on top of whatever chart you want to overlay them.
Correct.
Okay.
Correct. Okay. So here we are on the 5-day, 5-minute, and this is Thursday and this is Friday. So Thursday was pretty much almost identical to Wednesday's. It was up, then it was down, then it was up, and then it was down. And then on Thursday, it was up, and then it was down, and then it was up again. Kind of, very similar. But today we had an overnight high of 252.68. And and we had an overnight low of 248.01. That was our overnight low, and this was our overnight high, 252.88. Got it? We got that. Okay. So there was buyers came in at the 248 level and brought our price up, and this was the opening today. The opening today was, well, the bias was kind of neutral. This didn't really tell us overnight. Didn't tell us whether it was going to go up or down during the opening. And we'll go to the 1 day, 1 minute and come back. And so today, from that overnight session, we went down to the lows and we came up to the highs of 252. And then we opened up right in the middle, 251. And we came right up to those highs again. And in fact, touched the trend line, the downward trend line from way back when. And
that would be February 23rd ish.
Yes, exactly.
Not so way back when, but just near
a whole month away.
past.
When you're day traders, that's a long ways away.
All right. I think the context of being a day trader is made more relevant by a broader perspective.
Okay, we just looked at the 6-month chart. We saw. Okay, all right. So anyway, and
I'm grounding that knowledge.
All right.
Making it relevant.
Okay, so today so in the morning session we definitely traded higher and we topped out and we failed and we came back to the bottom, and then came right back up during the open. At that point, we topped out at 253. We went right above the overnight session, but we didn't stay. I was complete failure. It went up that high and then started dropping fast. And then it traded sideways for a while. And I drew this trend line from the morning to the second and then third higher lows of the morning. And then right here, we broke trend line. So right. I want to tell you my first trade. Okay, this is a highlights reel. The trade was when this at 10:15 or so, okay, it broke the trend line going up. So that was an indication that it would fall down further. Another indication that it was going to go further is that we got the divergence of the red and green, positive and negative.
The sellers started increasing, the buyers started decreasing.
And the following through of our trend line, saying that it is going in that direction, following through. Mm-hmm. And so here I have my arrow. This is my entry point here. And my target was 248. At that time, I bought the 248 put. Okay. Mm-hmm. At the 10:15, 10:30
you were shorting the stock and you felt like
it was going to keep going further down. And my target was 248. Why did I pick 248? Well, that was the overnight low. Mm-hmm. Okay, so
in less than 24 hours, it had already touched down that low.
Right, in the morning. So I was expecting
you weren't asking it to do anything more than it had already done in the past 24 hours.
Correct.
Low expectations.
Correct. And my exit point, where's my arrow? I thought I had an arrow here. Anyway, my exit point was right here when my trend line started going down and divergence started. I mean, they started coming closer together, and I thought that at this point that it was gonna. It had come to my target point, 248, and I was happy there. I was willing to exit my trade there. I didn't know whether it was going to go further down or not, and if I can get to my trades here. So the first one was the 248 put. And basically what we got here is all right, at 10:15, it was down here at the gosh darn, I didn't put a price range there. It was like 89, 90 cents or something like that. And then by the time I wanted to exit, it was at the $2 level. Okay, so at this point, I was done. It hit my target of 248. I was done, and it started trending lower, but I was out by then. If I would have kept it, maybe I could have gone to 250 or so. But I was happy with this trade from the 0.8 or 80 cents to the $2 range. I was out at $2.
What's going on with the Wi-Fi?
And let's see, SPY. So we only got a couple more minutes. I just wanted to show you the other trades. So that was my entry point. This was my exit point. What happened for the rest of the day? Well, if I would have kept on it, I could have seen that I kept swinging my trend line out, but it kept going down. In fact, once it came below the 248 level, it really came all the way down to, where did it go? Well, it went just below the Fibonacci line, 61.8 Fibonacci line. All right. And there, the divergence happened again. It started climbing, and it looked like another trade could be going on right here. But I really didn't want to. I wanted to get in here, but at the same time, I wasn't.
It's the end of the day. If you're past the 2 p.m. point, don't try and move fast unless you have experience and leftover money that allows you to burden the risk associated with that quick timeline.
All right. At this point,
2
I
to
wanted
4
to
p.m. is
put in
fast.
a trade right here at this point, but I was like, you know what? Let me just wait and see. We have plenty of time left in the day.
I disagree with that.
And
but
the
okay.
trend, and I made the trend line from the bottom that it was earlier to the second lowest point of that time, and I made a line. And then so at this point, I made my second trade. It dropped below this trend line, and I knew that my stop, if I would have bought it here, my stop was going to be below the Fibonacci line. It was going to be below where it had already traded once. So darn it. And I bought the, what I buy? I bought the 247 call at this point right here at the 1520 1540 330 345 time frame.
Mm-hmm.
Okay. I bought the 247 call. So the 247 call at 1530 was right here. I bought it
For $1.
For $1. I bought it for $1.
All right.
And
so
I had my
$100.
stop. Right.
Yeah.
I bought two options, and
you paid $200, did you?
Yeah. And so my stop was below that point. I didn't know at one point. I felt like somewhere in here it was going to start going back up because for one thing, it was really strong. It consolidated for such a while, and it kept hitting
Did
that
you
bottom.
put a stop order in at a certain price so you didn't have to manage it?
It's my mental. No, on the options you don't do that.
Okay.
That's too dangerous. Yeah. You get stopped out. You got to mentally keep up with it. So anyway, if I zoom in here, it went down to 43 cents. Okay, I was down half of my value there. Okay, but I thought I didn't want to try and trade because this happens so fast.
That is $3.45.
Yes, it's happening so fast right here. I was just wanted to get in because I thought that for sure, and I kept reading how the Fed is buying $50 billion or a day they're buying.
Right,
I'm like, they really don't want this market to go down,
No,
especially
they
over
really
the weekend.
don't.
So I felt like they're going to come in and buy before. And that's what I felt. I kept reading these articles. And anyway,
really cavalier move.
So right, so 345 comes around, and what does it do? It just spikes right up. I had already put in my trade order to sell at $2, and it sold within 10 minutes of the time I bought it for, and I was out. And that was another trade. And if you look at the chart before the time runs out, let's see. The SPY chart. Come on. The SPY chart, and for sure it just spiked up, and this is what I saw. I saw all this green. People were buying and buying and buying. They weren't letting it go down too much. So I bought here at the break of the trend line,
right? Which would be a good buy. I mean, buy low, sell high,
and my stop was right here, and it paid off for me at the end of the day, and so those are my trades. So this is what I saw: the green over the red. And the divergence happened right at.
And you can easily see the red over the green. Just make it a short or make it a call.
Right, but yeah. So this was a good day for me.
Thank you for listening.
And thank you for being here, you guys. And I just wanted to point out how the Fibonacci kind of was a level point. It wasn't a price point, but the Fibonacci was a level point, I think, mentally for everybody to either buy or if it was going to break and hold. And whether you believe in Fibonacci's or not, they sometimes work and they sometimes don't.
Good night, everybody.